Morning, everyone. Before we get started, I was told by my esteemed colleagues and panelists there are 3 rules for today's session. Number 1, we're going to have a little bit of fun because it's the last session. Number 2, we're actually going to answer your questions. So as they come through, I've been told I have permission to navigate accordingly and tee those questions up. And number 3, we're going to do something a little bit different, which is just given the diversity of folks on the panel, we're just going to take 30 seconds for each one just to introduce who they are, the institution they're from, what they focus on, and then we'll get into the questions. Start, Carlos? Do you want to start?
Bueno, muy buenos días a todos. Es un placer estar aquí.
Good morning. It's a pleasure to be here at this conference. I'd like to take this opportunity to congratulate Sean and everybody for having so well organized this conference. We're quite sad because this is the very last panel session, but others might be quite happy because they get to go home. I've been working for 30 years now in insurance, and I've worked in 2 insurance companies. One of those is the biggest in Colombia, and the other one occupies the 5th place. And then the only cooperative insurance business in Colombia. There's 33 insurance companies in my country, and La Equidad Seguros, the company I now work for, has 11th place. $8.5 million is the turnover, is the premium turnover in our country, and 2.5% of market share is held by my company. $112 million by way of premiums. We have 5 branches in our country, 17 concessions, and we also have 2,000 insurance agents or brokers. We have 1,300 mutuals and others in our country, so we reach out to more than 5 million Colombian citizens who need insurance products. We have been growing and developing throughout the years, and we put people first. We are a cooperative with a social way of thinking. We think of our people. We have a foundation, therefore, a foundation that helps promote social development programs for young people, women, etc. We have scholarships, more than 800 high school scholarships, which are offered to disadvantaged people, the poorer segments of society. Then we try and do something as regards environmental protection. This is a concern in Colombia, so we would like to help here too. We have something called green cooperation. We hold more than 2,000 hectares. We've planted more than 2,000 trees. So we're aiming at reforesting deforested areas. We're trying to bring more oxygen to that deforested area. The 110 members of ICMIF would like to take part in an environmental program in order to try and mitigate the impact of environmental programs. Then we also are very involved in sport and football. We have a professional team. It's called Equidad Seguros, and we have been involved in football championships in Colombia for the past 10 years with our football team. So we're trying to encourage young people to play football. We've reached a series of agreements with our cooperatives and with other national bodies, and 20,000 young people are being trained to play football. You know that we have just come out of a period of 50 years of conflict in Colombia. We've just signed a peace agreement in Havana, in Cuba. So we're trying to do something on the social plane. We're trying to help those people that have been very much affected by these years of violence, and we're trying to do that by helping them take part in sport through the cooperative movement. It's very important to us to participate in this conference conference where we talked a lot about technology, about new technologies, about digitalization, etc. But we must not lose sight of our roots and to whom we owe something and to whom we have to pay back in our society, those that have helped build up the cooperative movement, and those to whom we have to benefit. Thank you.
Thanks, Carlos. Hello there, Chris Black from FMG in New Zealand. As I mentioned the other day, we have only 2 mutuals in New Zealand, ourselves and Medical Insurance, who's represented in the room. We have a relatively small business in comparison with that, Carlos. We've got 80,000 clients, we've got 550 people, and we operate in the general and personal insurance markets. In terms of the way we position the company, it's around relationships. We have a proprietary distribution model, so we don't deal with any intermediaries. We used to, but we don't anymore. And we target our core market as rural New Zealand, so we insure about half the farmers, but we also have commercial lifestyle block owners, which are hobby farmers, and also residential clients.
Great. Anne?
My name is Anne Sommer. I come from Sweden. I work for a group of 23 mutual companies. They own a holding company that owns a life company, a unit-linked company, a bank, and a non-life company, and I'm the CEO of the non-life company. I'm responsible for buying reinsurance for the whole group, and I also have a lot of pet insurance and health insurance. And my company works as an incubator for new, or a greenhouse for new business that we develop, and then once it's large and profitable, it will go out to the mutuals, and they are the distributors always, all the time. And we do not have many intermediaries either. It's a very local concept. Each and every mutual is very, very local and know all of their members. Very, very good concept. We have 30% of the market in non-life. And they have a big share in life, and the bank is, I think, the 5th largest bank. So it's a winning concept.
My name's Tim Harris. I'm from Royal London. We're the UK's largest life insurance pensions and savings provider. We've got about 3,500 employees and about £105 billion under management. We distribute mainly pensions products through independent financial advisors in the UK, typically small firms of advisors who are serving our clients. In total, we've got about 9 million policyholders and about 1.1 million members.
Perfect. Chris?
My name is Chris Hilger from Securian Financial Group. We're in St. Paul, Minnesota. We are primarily a life mutual, and in the U.S., I think we'd be regarded as a mid-sized mutual, but we're a pretty diverse organization involved in a number of different businesses. We have about 5,000 associates, work with customers throughout the United States and Canada, have about 18 million customers, a lot of insurance in force, 1.2 trillion life insurance in force, and about $6.5 billion of premium a year. What makes us a little unique is how diverse we are. We actually, in addition to the individual products selling through affiliated and independent financial advisors, we also have a big business helping employers provide life insurance benefits to their employees, and then also a financial institution business where we're helping financial institutions provide protection to their customers, and primarily a focus on credit unions, that cooperative model where we are helping credit unions help their members with financial security needs.
Great. So, over the past couple of days, there's been a lot of conversation around disruption, technology, but I'd like to take it back to basics for just 1 minute, which is, as you guys look at your customer base and their evolving needs, and you look at what's available to serve them and your unique relationships with them, how have your customers changed over the past couple of years, and what have you done to keep up with those changes and serve them differently? Anne, do you want to take a shot?
Well, every human being has changed because they're now attached to something I forgot, my mobile. I feel very naked without my mobile phone. something might be happening right. Oh, thank you. But the problem is, yours isn't good enough for me. I need mine with my apps and my everything. And this is what's happened to our customers. They're no longer the sole customer. They're attached to their phone. So what have we done? Well, we've done an app primarily for the bank, but you can also see your insurance engagements on that. And it's very, very common to look in your phone, in your apps every day, and that's a big change. But I don't think that is enough. I think you need the personal touch as well. And we are very big in agriculture. We have more than 90% of the farmers. And I think that whatever statistics we have and whatever app we have, they would still like us to come out, talk about our plans for the future, see what they're going to grow, how they change the generation, which is a big thing in Sweden, that people are getting older and the children won't take over their farm. You can't do that on an app. You have to do that face to face. So I think the majority of our customers, they now live in their phone, but you have to see them every now and again when important things happen to them in their lives.
Any reactions to that? I mean, Chris.
Yeah, we heard a lot about it yesterday and how the expectations of our customers are being shaped by the experiences they have, not just with other insurance companies and other financial services providers, but lots of different out-of-category providers out there. I'd say we as an industry have been a little slow to catch up and to deliver on those expectations, but that's where the real opportunity is for us. And quite frankly, if we don't respond to it, that's where the real disruption risk comes to us as well. So we have a lot of focus internally on meeting those changing expectations, mobile, digital, streamlined web experiences, just serving up information and solutions to our customers how and when they want it. It's an entirely different ballgame, and I know our organization, like many in the industry, is really dedicating a lot of resources to meeting those changing expectations.
I suppose the way we think about it is coming back to a core sort of positioning of the business, if you like. And as many in the room will be familiar with, there tend to be three ways to position a business: around relationships, around innovation, or around scale and efficiency. And so we've made a very clear choice to position our business around relationships. So we want to win on relationships with clients, and we have a direct model, and that supports that. But we also want to be competitive on innovation. And because we're a relatively small company, we don't want to be uncompetitive in terms of efficiency. So we've positioned it around relationships. And then if we look at it from a client point of view, we try to make sure we're thinking from the outside in. So I think a lot of the commentary around AI and bots and digital, and it tends to have an inside-out perspective to it, as opposed to a client-driven outside-in perspective. So, the basic requirements of clients and what they value, things like, saving them money and time, convenience, avoiding hassle, and providing peace of mind through protection, are the things that we really focus on in terms of everything we do. So how does what we do add value to clients in that context? And one of the things that I think I've been very excited about is through the last couple of days is the opportunity we have that's different from banking. So yesterday, up on the chart, it was very interesting to see that the most advanced industry in terms of digital was personal banking. And the thing with and that was number one, and insurance was number 14. And part of that is just the number of opportunities you have to interact with clients. And the thing with personal banking is you do it every day. And some people are pathological and they do it 6 and 7 times a day. But with insurance, it is less frequent in terms of interaction. There's a renewal, it might be an endorsement. And so what I see as a really big opportunity from a client's point of view is to increase the frequency and also value add of those interactions with the information we have, to help clients understand the risks they have make them aware of that, and then help them to make informed choices about the risks that they want to take and the risks that they want to pass to their insurance company. And I think we wouldn't want to underestimate the professionalism of our industry and the professional advice that really underpins that and the trust. Because I think, we know a lot about insurance, but our clients don't tend to. So it's incumbent on us, I think, as professional advisors to really understand what it is that clients need and value and to communicate that effectively.
So both of you mentioned this, this notion of, you want to have more information, greater insight, but you want to still have a personal touch. How have you guys navigated that in your organizations? Has that been something that's been a threat to your organization? Have your traditional relationship managers embraced it? How has that worked? Has it been additive? Has it caused confusion? How have you managed through that?
No, I don't think it's caused confusion. It's just about blending the different channels together, I think. We are very strong on our physical distribution, so we have offices around the country. We have people in cars that go to farms like Anne does, and to commercial businesses as well. But a lot of the simpler transactional type requirements are done over the telephone. And we put a lot of emphasis on answering the telephone. We have this 99-10, which is we answer 99% of the calls in 10 seconds. And the only reason we do that is because people call and want to talk to us, so we do that. And digital we see is coming in and adding to the mix there. So we see them as complementary, actually. And I think, a range of things we do on the telephone right now that we used to do face-to-face will go to digital, and that'll be a natural progression. The trick will be to keep that personalised relationship face-to-face, as Anne's talking about, I think.
Yeah, I'd just add one other thing to it. The business of ours that has the most traditional personal touch is our financial advisors, our affiliated advisors working with retail clients. And it's not been a challenge at all because they're clamoring for it. They're demanding that we provide, our advisors are, technology to help them spend more time with their customers and less time with some of the more mundane aspects of their job, filling out forms, processing applications. They are in many ways pulling us towards greater technology and making them technology-enabled advisors. I've been really pleased that they've not seen it as a competitive threat at all.
Carlos?
Bueno, el negocio nuestro.
Thank you. Our business is split into two parts. We are cooperative, so people look at us as an insurer rather than an insurance cooperative. We have to remain competitive within the entire insurance sector. So we have to try and meet our clients' needs, and we have to be able to service the needs of our clients. As in many other countries, Argentina, Brazil, Mexico, there are many applications now on the market, and many more are being developed. We have also many agents, insurance agents, so we work with third parties, and we work together with 1,300 other entities. There are 240 credit unions and financial cooperatives, and they compete directly with the banking sector. As Chris was saying, we are slowly too catching up with the technology that is now being used in financial entities and in the banking sector. We're trying to catch up. Very often, we lag a bit behind in technological development. The bank is much more advanced. So we try and help savings cooperatives, credit unions, etc. too. We work on the basis of solidarity. So we stick to a basic principle is that cooperatives cooperate with other cooperatives. We have banking operations too, insurance banking, and we market and sell life or non-life insurance products too through this channel. Cooperatives do not have the financial resources to acquire these new technologies, whereas banks do, of course, and that's part of the reason why we're lagging behind. So banks, because they have the financial resources, they want to start offering too, or the products that our cooperatives and insurance entities offer, because they have the funds to buy those products and sell them on. So we're trying to see how we can remain competitive and how we can survive on the market. So the financial aspect is very important. We need to do something working together between cooperatives.
The audience is, as we think about the customers wanting more of a personalized touch, that implies a lot more data that you're collecting about the customer. How do you balance that with regulatory restrictions? How do you balance that with, you now have a lot of this customer information, how you make sure it's secure? How has that changed kind of your focus internally on data and how you manage it and what you do with it? Tim, you want to take this one?
Yeah, sure. So I think one of the big themes in relation to data and data management, certainly in the UK and around Europe at the moment, is around regulation and the GDPR regulations that are coming in next year. And potentially that could make a pretty significant difference to the way that we look after clients' data. Having said that, historically, our problem in the business hasn't been what to do with the data, it's having it at all. And the transition that we've seen really over the course of the last, I suppose, 20 or 30 years is from paper-based systems, agents out in the field, collecting information which is in many cases long lost, to a situation now where we're automating the interface with the advisor and with the client, and we're capturing data without having to have any kind of manual interface or rekeying. It's a big challenge for us. I think the places we see, though, the big data coming in and making the most difference is in relation to our underwriting and pricing practices, and just getting a lot smarter. And I think that the big challenge for the mutual sector is to be able to keep pace with some of the developments we're seeing in those areas in our proprietary peers. Certainly in the UK, some of the data analytics are getting extraordinarily advanced.
What are you most worried about on that dimension?
I think it's the obvious risks around things like anti-selection. But more than anything else, as we grow as an organization, and we're very much targeting to add really great value but at reasonable price for our customers, making sure that we can compete not just on that value dimension but also the price dimension. And certainly when we look at our protection business, the data analytics are driving a focus and if you like, a reactivity to price changes that we haven't seen certainly recently.
It's interesting. So I think what I'm hearing is, the data and analytics piece is helpful from a personalization perspective. If you fall behind, it can leave you in a world of hurt. And you also have this notion of how you manage it. Any other reactions on the data piece? Like, do you view it as something you're excited about, something you're fearful of falling behind on, something that gives you stress of becoming a target for, cybersecurity? How do you think about it, Carlos?
Ese es un inconveniente grande, nosotros lo vivimos.
That is a problem, and it has affected us. 1,300 entities are sometimes affected, are vulnerable anyway, and we have to do something about cybersecurity. We're talking about 2 million clients here. I mean, there is regulation in Colombia. There is data protection regulation, and there is regulation when it comes to having access to databases to get client information, etc. But the cybersecurity issue is quite complex. We haven't reached the levels we would require when it comes to working with big data, really. We haven't really been able to do the cross-selling that the banks do, and we can't analyze our clients' needs as regards other products. There are 1,300 companies in the insurance sector, and we haven't really done what we can do yet. So there is a lag then again here between us and the banks. And we know that this is an important issue because those that can properly administer and protect their databases, those that really know what the needs of their clients are, what their clients like or do not like, are the ones that are going to get the business. Because what we have to sell is our good experiences with our clients, our client relations. We have to convert what the insurance products that we sell to the client into a personal experience, a personal relationship with the client. And in order to do that, I have to know what my client wants, what he needs, and we're far from that yet, unfortunately. So this is a concern of ours.
We're getting from the audience here. So as you think about the customer centricity we talked about earlier, multiple channels, as you think about the data environment changing and not wanting to fall behind, how have you guys managed to organize or shift your organizational structures or your capabilities to take advantage of this? How have you hired data scientists? Have you had to reorganize to take advantage of and be able to, use these different tools, technology, sources of data? How has that journey been for you?
I think you look at this two ways. It's one way that other people look at this business, the mutual business, and they say, you have this big data, you have to have innovation, you have to have an innovation center. We heard that yesterday. But look at our core business. What is our core business? Well, many times it's not to have claims. We are there for the customer. And I think we live in fantastic times. We are getting more and more analysis, more and more data on how people live, where they live, what kind of accidents will happen to them. One of our big things to do as a mutual is to prevent claims. And you see a lot of innovation in that area within the companies that never make it to the innovation department, that happens in the claims department, in the relation with the customer, when you walk around with the farmer. So sometimes we tend to shift and look at it like any other business. We have a deeper, the product we sell, no one wants. You don't want to have a claim. You have to buy an insurance. And I think in the future, we have all the regulations, we have all the data protection like everyone else. We have to follow the rules, we have to be very careful. But we do also have, I don't know what it's called in England, USP. We have something that's special for us, and that is that we are good in seeing where risk is going to happen, where claims are going to happen, and where we can avoid it, because this is our biggest task, really. And sometimes we tend to forget that. We put an innovation center to say, how are we going to reach new customers, how are we going to do that? But we have the old customers that want nothing else but have a claims-free life, a happy life, and we can help them with that.
Any other contrasting perspectives, Chris?
Yeah, the data to me is so foundational to all the things we've been talking about the last day or two on the technology advances and capabilities we want to have in place. And yet, one of the things that I think that we overlook when we get excited about those ideas is how difficult it is to operationalize them. And data in particular, when you think about the legacy systems we have, that getting access to the data is at times the biggest challenge. And I harken back to one of the comments that one of the speakers yesterday made the point on, and that's just getting started with it. So what we've done with data is really tried to come up with some use cases where we can develop the capabilities to use data to deliver a better experience or to inform our pricing and risk management. And we've set up two different areas. One, marketing analytics, and second one, what we're calling actuarial analytics. And the actuarial analytics is all about us not becoming disadvantaged when it comes to the information necessarily to appropriately price our products. We're using that in new ways that we have not as recently as 12 months ago. And then in marketing analytics, we're finding new opportunities to sell our products and services by identifying insurance distribution intermediaries that are more inclined to sell our products and services. We actually have been able to quantify the lift in sales by using this data, both internal and external, to find those better opportunities. But you have to get after it. You have to find a way to develop a use case and just get started, and you'll be surprised how you develop the first step towards better use of your data.
And Chris, just on that journey, have you, been, leveraging folks that were already in your organization? Have you got to look outside? What has your experience been on the talent front to do some of that?
It's both. We happen to be in the Twin Cities, Minneapolis, St. Paul, and we have a lot of big companies there in retail and banking and other industries, and we've been able to draw some talent from those organizations that have brought in fresh perspectives. But we've also been able to give some really exciting opportunities to people internal, particularly on the actuarial analytics side. There are, that's what we do. That's what we've done for generations is actuarial analysis. This big data and analytics thing sounds new, but it's actually what we do as a company. And so it's presenting some great opportunities for existing talented staff, but enabling them with new tools and a new organizational commitment.
Tim, how do you think about it? I mean, you're in the UK. There's banking, there's insurance, there's brokers, there's Lloyd's, a bunch of people fighting for the same talent just in financial services. How have you cracked the talent capability angle of this?
Yeah, so first of all, the bulk of our operations are based outside of London, and actually in the UK, the regional differences in the competition for talent are quite pronounced. So our main offices are in Cheshire, near Manchester, and in Edinburgh. And we've been really, really fortunate to be able to recruit, especially on the actuarial side, some really, really smart people coming who want to spend their lives, their family lives in the northwest of England. There's not many life insurers, never mind mutual life insurers in the northwest of England, and we are fortunate in being able to attract many of them to come and work for us. And they're coming into the organisation. What we've then got to do is provide them with the tools to actually make the most of their skills. And I think that's where the really big challenge is in terms of the investment that's required to really be able to access and make the most of these new technologies. That's a real challenge for us. But fundamentally, we organise ourselves by distribution channel because the face-to-face interactions of our ultimate customer with their financial advisor is still by a long way the biggest generator of new business for us, notwithstanding all the other opportunities around technology.
So that's one question we've also gotten from our audience here, which is face-to-face distribution can be very expensive. And you look at, differing customer expectations. Where do you think the equilibrium will be in the next 10 years?
I think with a proprietary model, as I was mentioning before, it is a multi-channel. So the more simple transactional things, if one can do this on the telephone or digitally, that'll be great. And so that frees up professional advisors that tend to be more expensive, particularly if they're mobile, to really add value on the advisory side. And that's where their point of difference really is. Otherwise, you can do it on the phone or do it digitally. So I think so just really freeing up people is extremely helpful, and one needs to do that to make the economics work. But also, I think strategically it's an important point of difference for us certainly as an organisation and for us as a mutual, because most people aren't doing that. Most people are building, it's around scale and efficiency and transactional. And it was interesting yesterday looking at, does it cover where you can take out insurance for an hour? And I went and had a look at that site. Do you know how much it costs for an hour? It's like £7 to insure yourself for an hour. And if you just do the numbers on that, that is like a lot of, I hope no one here's from that company, but that just seems like really expensive. So I think it's about doing those things that can really add value through those advisors. And on the analytics side, it's very interesting. One of the things that I'll certainly take away is this, data privacy and protection, which probably is not as strongly intended in New Zealand as it is in Europe, for example. So that's on the one side. Actually, using the information, though, I agree with Tim's point around the corporate side, where you've got underwriting and pricing. And then on the client side, though, we just see so many opportunities that are low-hanging fruit. So, we've got clients that we know are a certain profile, and they won't have business interruption, or they won't have income protection. Now, the question in our mind through those advisors is, have we talked to them about those needs, and do they understand that, and have they made a conscious decision not to take those covers? And have we documented that clearly so that if they do have a problem, they are clear and we're clear? And so we see lots of low-hanging fruit just on that. If you look at the McKinsey side, it would be like Horizon 1. We're looking at, we're not actually looking at the Internet of Things. So your fridges and your stoves and the telematics in cars and to us, we'll get to that, but we'll just go to Italy, whoever was from Italy yesterday, who's doing lots of this stuff and get to that in due course. But we just see so many low-hanging fruit that's pretty basic in terms of analytical marketing that will keep us going for a little while, and then we'll add on to that.
Dollars?
Sí. Hoy en día es muy importante.
Nowadays, you have to have different channels really to reach your clients, and the clients need different channels to talk to insurance people through instance, using their smartphones, through websites, through strategic partnerships, etc. So the insurance company should work through these different channels to reach their clients and vice versa. I think, well, look at Uber. You could offer or develop a life insurance for all Uber drivers and some sort of third-person liability protection or something like that. You could link up to Uber and use the technology that they've already developed, for instance, and PayPal too, and other companies like that. So you can forge partnerships with all these sort of technologically advanced companies. You can use direct channels too, and we've use those at the moment. We have 100 direct sales agents at the moment, sales executives we call them, and they work on a cooperative basis, and they offer personalized solutions to our clients. Technology is not going to change the way we do business in 5-10 years. It will change things slowly, yes, but not dramatically in 5-10 years. Look at Latin America nowadays. Look at the penetration of the insurance business in Brazil, Argentina. It's about 4%. In Colombia, it's 2.4% only. So there is a huge a number of our people that aren't aware of what insurance has to offer them. They have no insurance. They need people who explain that to them. So we have direct agents that need to go and talk to these people and explain about insurance to them and offer them the coverage that they might need. So that is something that it's a channel that we will continue to use. And it's something that we must be aware of. We can't leave that to a robot or to the internet or to some sort of digital tool in this era of digital revolution. So we still need personalized solutions. We need personal relationships. That personal, direct channel will continue to be important. It will continue to develop. But of course, it will be helped along through technologies. Technology will help us meet the needs of these clients in a more efficient and speedy manner, of course. But we need the personal touch still, and we'll continue to need it. You might find it perhaps a bit strange that we used to use more than 600,000 sheets of paper to print our policies per month without going into startups or InsurTech or anything like that. InsurTech, sorry. That is something that we need to change. We have to become much more digital, paper-free. And this would help when it comes to environmental protection, of course. It would help deforestation, curb deforestation, stop using so much paper, become paperless. That's something that we need to focus on. So we can use new technologies for that. So new technologies can help us, but we still, I repeat, need that personal touch. Technologies can help us deliver that personal touch more efficiently. But we need to visit with these people and visit with our clients.
A lot about data analytics technology, not getting behind how you build those capabilities. Let's go back to the core of what makes you all special, which is mutuality. And the question I have for you guys is, what aspects of mutuality do you think you have done well leveraging? And what aspects of mutuality, either in your own organization or as a whole, do you think you have room to leverage further? Anne?
Well, I think mutuality can save the world. I'm convinced. If we start with Sweden, a Swedish person have 5 problems. The first one is they have no interest on their savings. So they will get no pensions because the interest is so low in many countries as well. We can help them. We can help them get a good pension scheme and invest in funds and so on. The other problem the Swedish person has is that they have extremely high mortgages because it's expensive to buy a house. Well, we can help them there with insurance if your spouse dies or gets sick or so on, so you can stay in your house or relocate. So that's 2 problems that we can help them. We can of course help them on the mobile, but I think in some situations you actually need to meet, especially when you buy your house, and we will be there. They can trust us. I've written 2 hearts. One says mutuality, the other says trust, and I think we have to build the trust. Then we have one trend in Sweden that's very strong, and it's that people get more ill, and primarily from psychological illness. And it's mainly women in between 30 and 45, and they have the second child. They have, and so we have a health insurance where you have a service where you can call the psychologist, where you can get help. So I think that's another angle. You have to build on services. So if you don't you talk to them digitally, they might need to talk to a person, a psychological person, or if they have a divorce, they can talk to someone that knows finance. So I think insurance is the base, but you will add services where you meet your customers. And the last and most problematic curve we have in Sweden, or promise, that we live a lot longer. And it's good, but you want to have some money at the end, and you'd like to be quite well at the end. And even there we can help with solutions. So I think it's not the politicians that's going to solve the future for people. I think that's the mutual companies, because we are not like taking the profit and running off. We will invest the profit, give it back to the policyholder, or invest it in more new things. And the 5th problem we all have is the climate change. And there, we cannot fix that by ourselves, the mutuals. We need the other insurance companies too, because we have $25 trillion US dollars in investments, in pension funds and that, and the whole world economy is $78 trillion. But if we all decided to invest in green bonds, blue bonds, anything else that is good and that is sustainable, and if we put this pressure to do that onto our reinsurers, onto the people that come home and fix a bathroom and there is a claim, we could change the whole world. I mean, this is fantastic. Do you know this? And it's your customers in your country, with your members, that will benefit from this, and it's all of us. And I think these values are so important. Then some people might choose to sit just with a phone in their room by themselves and look at little numbers here and there. But I think majority of people want to have a bigger plan.
Any other reactions? What do you think the mutuals you've done well? What are areas you think you could leverage further, Tim?
So I'll give you a very practical example. We had a real emphasis over the course of the last few years on trying to make mutuality meaningful to our customers. The focus group insights we were getting was that while if they were prompted, our customers kind of felt good about being in a mutual, it wasn't like a big reason. And we have implemented a scheme which has actually been around, but we kind of repackaged it, where we are now returning a significant chunk of our profits to our membership in what is actually financially a pretty meaningful way. So for the people who own our accumulation pension products, they will get a rebate in good years, all things being equal, of about 20 basis points of their invested funds as a result of their membership of Royal London. Now, they wouldn't be getting that from a proprietary company. And it is very much, I suppose, the parallel of a proprietary company dividend, but going to our members. And that can be a very significant chunk of their annual management charge on a pension. If you work out how that accumulates over 20 or 30 years, it makes a pretty material difference to people's savings. And I think that's a very practical way that being a member of Mutual, owning a Royal London pension, can be a different proposition to owning a Legal and General or an Aviva pension.
Any other experiences? I mean, there's the monetary aspect as well, but any other views on?
From our point of view, I think one of the things we've... Can you hear me there?
Yeah.
That's working okay? One of the things I think we've done extremely well over the last 7 or 8 years is to increase the brand awareness of FMG as a mutual in New Zealand. And so our brand awareness is extremely high now in our target markets. So that's been helpful. We have a model where we have 80,000 clients, but only 50,000 are members. And those are the people that are predominantly rurally based. So we've had a communication strategy around promoting mutuality generally and protecting the membership. So we don't talk about membership very much because it's quite complicated, because an individual client can be a member, and then if that same person is with a trucking company or has a residential property, is not a member. So it gets very complicated. So we have this mantra of promoting mutuality and protecting the membership. So I think the visibility we've managed to achieve has been very good. And I think the other thing would be we've had 2 large earthquakes in 2010-11 and recently last year. And so we've been there when it counts as far as our members and clients are concerned. But we've had to take the step this year of putting our prices up for property 10% on average, 15% in peak risk zones and 7% on non-peak risk zones. We're very concerned about that because when you start getting double-digit pricing increases, people really start to question the value and often look outside. What we found though, and we're 4 months into this, is our client retention this year, through good planning, good preparation and really good execution, our client retention has actually been higher this year than it has been last year, and we're writing more new business as well with those higher prices. And so I think that what that tells us in behind that is that if it wasn't for the mutual model and our pricing structure, which we try to keep low and stable for the cover, to be honest, the pricing would have gone right up because most of the industry is a listed company. So I think that's one thing that we've really kept the pricing stable for the New Zealand market, not only in farming, but also commercial, lifestyle and residential. On the flip side to your point, Keir, the thing that we struggle with is, so we run our rural business at a loss quite deliberately because they own the business. So we have a loss ratio there, a combined ratio of over 100%. And on our other segments, it's higher. So commercial will be about 80, lifestyle about 80, residential about 80. And so we deliberately run rural at a loss. But the members don't know that. So one of the challenges I think we have on the flip side is to communicate the value that we are providing to members, whether it's because we pay more claims, whether it's because of the stable pricing, or just some of the good things we do. I think that's a challenge we're looking into at the moment.
No hay que olvidar que estamos en
You mustn't lose sight of the fact of where we are. We're in London, pioneers of Rochdale 1914, where the cooperative model was really born. And it's a model which is never going to become irrelevant. It's a model that generates jobs. It's a model that has led the way in world economy. In Latin America, we have countries like Argentina, and you heard Alejandro say that you have 180 insurance companies, more than 20 are mutuals and cooperatives. In Colombia, 33 insurance companies, and only one is a cooperative. Unfortunately, in Ecuador, under Ecuadorian law, you cannot be a cooperative, and the same happens in Peru, sadly. Nonetheless, it's a model that we must continue to defend, not only to the benefit of the insurance sector and the cooperatives in particular, but for the entirety of the sector. In Colombia, after the peace process, we have cooperated more fully with the government, because the government recognizes that the cooperative model can generate employment in the rural sector, because it's the rural sector that has been the greatest victim of violence in the past. And agrarian or agricultural cooperatives in the rural sector can generate jobs and can help social inclusion of people affected by violence in the past in our country. So the government is supporting the cooperative model. We must continue to support and defend the cooperative model wherever we are, wherever we do business. Commercial insurance business or a cooperative must highlight the fact that our members, our clients, are also owners of the business. They take a share of the profits. They can participate fully in all aspects of the business. A commercial company, in a commercial company, there's just one more client, and that's the big difference between cooperatives and other insurance companies. Don't lose sight of that advantage. You must leverage that advantage. It can help the world mitigate poverty. We have the greatest percentage of our population that are low-income earners, and we have credit unions and financial cooperatives in our country that reach those sectors of the population that other banks cannot reach, the more isolated, more remote communities, the poorest communities, because as you all know, banks are in it for the profit, really, for the financial gain. We are not. In Colombia and in other countries, traditional banking generates millions, and they're there for economic gain. But what do we do with our benefits? Our profits. We invest those in social programs. We invest those in promoting the social good.
We got from the audience link to this is, as you think about the future of the business and you think about ways you guys can be distinctive vis-a-vis your stock companies, but you also look at, again, this theme of having to keep up. If you just reflect on your past 3 years running your organizations, what are some of the different types of talent you've brought in, either on your board, in your leadership teams, and as you look forward, how do you see your organization shifting over time, if at all?
I'll take this. We've seen a lot of change in the type of talent we've needed. I've been CEO now for going on 3 years, and it's been amazing, the focus in how we both attract external talent and how we develop internal talent. I don't think you have to go external to get all the talent you need. We have a lot of talented people in our organization. But the two main areas that we have been focusing on that I've seen a real change in is technology, all the stuff we've been talking about the last couple of days, and marketing. We have not been a very good organization when it comes to developing a broad retail brand awareness. We've done a great job historically in developing a brand awareness with our distribution intermediaries, but as we go more business to consumer, take advantage of the digital tools, we're convinced that a more well-developed retail brand is going to become increasingly important. We did not have those skills in our organization, and we've had to bring them in, really supplement that, and dedicate significantly more resources to make sure that we're actually developing that capability that we've not typically or historically have had to have.
And Chris, you said marketing. I mean, one of the other topics we were just discussing is how special being a mutual is. How has that played in your marketing messages? What has your experience been? Has that resonated with folks? Has that been a focus? How has that, that aspect of your business helped?
You know, it's interesting because a few years ago we did some focus groups and worked with some focus groups and tried to explore what mutuality meant to them. And quite honestly, in the United States, they didn't get it. They didn't understand why that was important. They might have been intrigued by it initially, but it wasn't going to make the decision for them and who they did business with. We've had to work hard on translating it to terms that resonate more with them. What does it mean from a cost standpoint or a service standpoint or an experience standpoint? And that's why we had to bring outside resources in, because we just have a great story to tell. I'm not quite sure we've always done an effective job telling the story as we could, though, and that's where we've needed those outside resources.
Tim, your reactions?
Yeah, I think it's really interesting what you're saying about branding and the importance of that's having. I mean, 5 years ago, we operated through, I think, 5 different brands, and actually the only part of our organisation that used the Royal London name was our asset manager, which obviously didn't have a direct relationship with customers. And I think especially when you're thinking about this combination of factors around attracting talent, around digital and, you know, frankly, getting people to download your app in the first place, actually having that name recognition amongst consumers is becoming really, really important. And we've invested a lot in that totally counterculturally over the course of the last few years. We've taken out sponsorships. It's interesting to hear about football. We sponsor for cricket in the UK. I don't know if they play cricket in Colombia, but we're working on that. What we've learned, though, is that's a slow process. You know, if you're really starting from kind of nowhere, and you know you're not Google or Uber or whatever it is, building up that brand recognition so that people will turn to your organisation first is a real challenge.
Do you believe in it?
Yeah, I do actually. I really do. I think that it's the key to having that constant relationship with the consumer. You know, people's time is limited, and they're going to turn to the organisations that they know and they trust. And if you're not even one they recognise, you've got no hope with knowledge and trust.
Just to add one more thing to that, and Tim hit on it, even if you don't believe that it can have an impact on your ability to attract and retain your customers and define the value proposition with them, it can have an absolute impact on your ability to attract and retain talent. I'm shocked, and we're one of the larger employers in St. Paul, Minnesota, and my next door neighbors don't know what our company is. And you know, we need to be able to be much more visible to compete for the talent that we need, because we're going to be competing against every other company in the community, not just insurance companies, for the talent that we need. Brand building and communicating that compelling brand proposition can be very powerful from a talent attraction and management, if nothing else.
Länsförsäkringar, it's easy to say. We are one of Sweden's strongest brands in the finance market. Not the strongest, everyone knows what we are. I'm not so sure they know we're mutual. I think everyone has had a long relationship, all our customers, and they know we're a solid brand with good values. But what we notice is that now university students and people are leaving school wants to come and work with us. But what they do is go in and look at our values, and they are more attracted. So we are climbing on being the most successful employer all the time, and I think it's the values. Why else would people invent lookalike mutuals on the internet? Because they are searching for something with values where you share your risk with other people, but no one is making an extreme profit.
So I just want to hit on the values point, because we had another question that came in that links to that. You know, there was a conversation, I believe, earlier around how politics has failed parts of society. And so as you think about the values and the structure of mutuals, what do you think the role of mutuals is in solving and helping places in society that are underserved, ignored, you know, not as thought of and paid attention to.
Just while people are thinking about that question, can I make a comment on the previous one around the skills? I think it's interesting in our industry as the value chain gets elongated, it becomes more specialised, and one will have to partner up with companies and put your brand against their brand, and that will be important as to the choices one makes about that. But with the specialisation, I think with people, there's a real trick or a challenge to weave in new thinking and new ideas to the institutional ideas you already have. And it's a bit like the phrase, young leaders. That might be a mindset rather than an age thing. And so we have some people in our business that are actually very forward-thinking, very young leaders in that sense and mindset. So with the specialisation thing, I think traditionally in organisations you've gone from one job to another and there's been lots of chances for internal promotion. I wonder with specialisation whether there's less chance of that, and therefore one needs to have more people coming from the outside at whatever level it is in the organisation because of that specialist requirement. Now, I'd like to think that, again, there's a balance there, and there's still an opportunity to give people inside the organisation an opportunity to do different things that they're not familiar with at all, even though it might be quite specialised and it may take longer. And it may not be as successful, actually, as opposed to just bringing a bunch of specialists in all the time. So I think that's something we work at quite hard, and it's very important, but it's important to have enough time to really have a good plan around that, I think. I didn't answer the question you raised, but I answered the previous one. But I've given a lot more time for these guys to think about that.
Le voy a responder las...
I am going to try and say something about these two issues. In the past 4 to 6 years, we've had to introduce major structural change in our organization in order to be sustainable. And our regulators also mentioned the need for change. The changes were at the top of the pyramid, too, in the board of directors. We have a more specialized board of directors now. 5 members of the board of directors are here with me at this conference, and they are listening very attentively to what is being said by all the mutuals and cooperatives represented here in ICMIF. So this is part of the big change that we have introduced in our organization. We've made changes to distribution channels, products, services, the way in which we deal with claims, etc. So we've made substantial changes. Market trends have required this change too, and will continue to require it. So we will continue to adjust and make changes where necessary. As regards the values we uphold, these are fundamental. They are a key to the cooperative sector, and we must continue to defend them. We try and promote and defend the values and principles of cooperatives amongst our population, amongst our people. I said at the beginning that we do this through our sports club and our foundation. The sports club, our motto is that if you uphold your values, you will win, and we instill self-discipline, honesty, etc. in the young people that take part in our sports academy, in our football schools, and 20,000 children are being trained or have been trained in our football schools. We also organize national youth exchanges, international youth exchanges. 2 years ago, we sent 10 young people to Argentina to spend some time in cooperatives there. And we've done the same in other countries. So we're looking to instill leadership qualities in our young people. I would like to congratulate the young leaders present here. I am very happy that 2 years ago we decided to do that, to involve young people and future young leaders in these international conferences. We want to promote the spirit of leadership in international cooperative movements.
Just as we think about some of the themes today, The notion of partnership has been asked by a lot of our audience participants. What do you think the opportunity is for partnership amongst mutuals and other organizations as you think about new capabilities you want to build, as you think about, new ways you want to serve your customers and clients? Any reactions to that?
I think potentially one of the interesting areas is around the development of technology. It was interesting to hear the comments that, some of the banks and proprietary companies have the opportunity to invest in technology significantly. And I mean, we've just spent a great deal of money as an organisation getting ready for a regulatory change in the UK called Solvency II, and that's cost us something like £180 million. So that's, very expensive thing to do. Technology we've developed would apply to pretty much any life mutual that there was. Why are we not doing more as an industry to share that kind of investment? Because it seems to me that's a way of actually reducing the expense burden on the sector as a whole.
Just speaking of that, what are the areas you think have the greatest opportunities to collaborate? So technology being one, but are there others that come to mind that if you think about the folks in this room, think about the panel, where would you like to see institutions collaborate more?
Lo más importante en el mundo no estamos solos.
We're not alone in this world, and we're not alone in our own countries. We're going to have to set up many more partnerships, networks, ecosystems in the world in the future. So as a cooperative movement, we must work together and cooperate with cooperatives in other sectors. We have to set up partnerships in order to survive and to be sustainable. We are going to be able to share services, products, economies of scale, etc. In Colombia, we have a city called Medellin. And there are financial cooperatives that have set up a network, their own network. And they get what they need, technologies, ink, paper, etc., through specific suppliers so that it is less costly. So they have formed this network, this partnership to be more efficient, and especially when it comes to marketing their products. As I said, we cooperate with credit unions and with transport cooperatives so that we can tie our products to the products that those other cooperatives sell. So we have set up partnerships with that sort of cooperative too, and we can do that in the cooperative movement, in the insurance business, and with other cooperative movements too in other sectors. We have networks with public service sector to sell vehicles, for instance, and we have set up partnerships too with the electricity, gas sector, etc., so that we can sell more life insurance products. So we've linked up to that area too. We have to work together in an integrated world. We have to continue to operate in our own fields of microinsurance, reinsurance, insurance, etc., but collaborate more closely, not with the cooperative movement worldwide. You can link your product offering, insurance, to the product offered by that other cooperative. That's the sort of partnership that we can develop further in the future.
What are your thoughts? Any thoughts on where you'd like to see cooperation or you'd see the benefit of?
One thought that came to mind as actually emerged when we started talking about technology and working with fintech and insurtech firms and the opportunity that they present to be innovators and partners. And I think one of the things that struck me from this conference is how we have that opportunity right within this cooperative community. I think about the conversation we had with Kumar yesterday and talking about how in microinsurance and in communities where the mobile infrastructure is the best infrastructure, it can really be a catalyst for innovation that I think can be shared across organizations because, quite frankly, he's probably doing things quicker and more appropriate for that target market than we have ever been able to focus on. So to me, right within this community, we have an opportunity for collaboration.
Any other reactions to that?
I find the public sector a bit interesting, especially when, for example, claims are concerned. We can see that in some roundabouts we have a lot of accidents, and to work with the community there and see that they maybe change something in this roundabout, it's in the claim side, and I think that's where you also have an opportunity to find partnerships to make the community safer.
Yes, I think I suppose there's a spectrum, as I see it, and at the qualitative end, being able to have a session like this to understand and share information and knowledge and networks, build networks is very powerful. And behind that is actually being able to, visit different members of ICMIF and really dig in under the covers, because often you need to get, to a more detailed level to make it of real value. So in a qualitative sense, I think that is extremely valuable. If one looks at the other end, one of the things that we've talked to a number of ICMIF members about, and I know has been on the table for quite a while, is there a mechanism that we could develop by way of reinsurance for top-end layers, across countries and across mutuals? And I think Nations, or I can't remember the name exactly, but there used to be some physical and financial connection formally around reinsurance cover. When we've looked at that, it's actually got too difficult because of the geographic boundaries, risk appetite, and different reinsurers involved and what have you. So that's the sort of area that has actually become almost too difficult. And then you've got, I think, this middle ground of partnerships and technology, and is there an opportunity to leverage some of that in different jurisdictions? That's a very interesting concept, I think.
So,
Una experiencia importante que se
One important experience in Latin America, especially when you talk about partnerships, is LARG, which is an international reinsurance group which was set up, which offers products to the cooperatives in the insurance field in Latin America. So that's an important partnership. A new partnership is going to be set up in Colombia. We were selected for the 555 ICMIF program. So 5 continents, 5 countries, 5 million insured vulnerable persons. And we hope to reach 1 million insured persons soon. We have to work together with other cooperatives in Colombia. Otherwise, we can't reach out to 1 million Colombians, but through networking and through partnership with other cooperatives. And we need to offer the products that they need, that they require. We're talking about highly vulnerable segments of society, and they need quite a lot of coverage, really. So we can work on the basis of a partnership to reach these million people, these million vulnerable people. We hope that you support this initiative in Colombia. It's a significant project. We will need resources for it. We need financial resources. We need to market it, etc. And we need financial resources too in order to have the technology we need. So I'm glad that we're going to be part of this major ICMIF program in Colombia, which will be of benefit to the poorer segments of society.
So I'd be curious as to each one of your perspectives on 2 things. Number one, what is the one thing you would take away and talk to your management teams about when you go back home? And then number 2, what is the one lesson learned over the past year you would share with your fellow members in terms of how you've been running your business, how you've been tackling some of the issues that have been talked about during the conference today? Does anyone want to volunteer to go first, Chris?
Yeah, I'll start out. One of the things that really struck me from one of the conversations was around technology as a way to build trust with our policyholders. I hadn't really thought about it that way, and because I've always thought it about a way to digitally engage, to deal with a lot of process improvement areas, but to use it as a way to improve transparency and build trust was a great takeaway from me. And then when I think about the things that I've done in the last year, that we as an organization have done in the last year to deal with these big issues, it's just get started. We haven't tried to figure out our entire data model and that we're going to use. We've taken some specific examples and just gotten started. We found specific ways to take the next step on the journey that's so hard for all of us to deal with, something that's certainly helping us make some progress.
Tim?
I think the one thing that I've enjoyed in the limited time I've had here is really the opportunity to meet people from other organisations from different markets and different countries. I mean, that's incredibly powerful. And I think I'll take away that there's a real opportunity to really learn from the broader mutual community. In terms of one lesson, I'll come back to technology. It always takes twice as long as you think and costs twice as much. And it's really hard yards.
I think there's something called the Mythical Man Month. That's a book about that. Even when you budget twice, it still costs twice as much as you thought. Anne?
Well, yesterday I had a bit of a awakening, and the day before. We are not supporting Colombia, but we are supporting the 555 in India. And when Kumar showed us the app, that was so transparent. It goes back to the core of mutuality, where the policyholder can see how many other policyholders there are, or members. And I thought to myself that we have to be more transparent. Otherwise, people will invent mutuals or cooperatives. But we are already here. They should come to us. And it's the thing about trust. And Inga Biel from Lloyds, she said, use a language that people understand. And that is, we get I love mutuality and I talk about it, but no other person that doesn't work in this business, you all understand what I mean, but no one else understands. And I think we should very, very much think on the language we use to be closer to our members in their day-to-day life. Not something far away. We should be there in there every day. So I will work on that when I get home. Other than that, I am happy to say that we are not alone. I'm looking at my boss, but we are working on plans and we are discussing the things we've been discussing here every day. And it feels really, really good that we are not the only ones.
Bueno, yo de esta jornada.
Well, from these days, what I will take back with me, first and foremost, is more friends. And that's very important. I've made so many more friends. It's so important, this business, where you sometimes invent things, really. But here in ICMIF, you don't need to invent. You learn about all sorts of new things, and you make so many new friends. So I'm taking back all these new friends with me, at least in spirit, if not physically. And also, we need a development plan, a development strategy for these new technologies. And I've learned a lot about these new technologies, which cooperatives and mutuals are using them, which are not, and which ones they are using. And then I found this book in the Lloyds building. You know that London is the birthplace of the insurance business. So I found this in the Lloyds building, actually, here in London. And it tells us how to make people aware of how important it is to be insured. It's a very easy to read book. It explains things very clearly and how to tell people about insurance and explain to them why it's so important to be properly covered. As we've heard in the different panel sessions, we've had hurricanes in the U.S., tsunamis, earthquakes, etc., so many natural disasters. And the thing that most strikes us is how underinsured people are. So we have to make people aware that they must be properly covered, and the government must help there. So we can help, too. We can help ourselves, and we can talk to government, too, in order to see what we can do to make sure that everybody is insured, is properly insured. And this is something that I'm taking from this conference in London.
Yes, I think for me, it's to reflect on the data privacy and protection conversation that has been raised here and is obviously top of mind for people in Europe particularly with that regulation coming in. Not only from a client point of view, but also a corporate point of view. You know, the information and the data we have is extremely powerful, as we've talked about today. So how do we protect it? How do we leverage it to our advantage? Because we do have a privileged position in that regard. I think the other thing, just reflecting, is Bill Gates has had that very good phrase, and I'm sure many are familiar with that. People they overestimate the amount of change that will happen in the next 2 years, but they underestimate quite significantly the amount of change that will happen in the next 10 years. And so I think two things there. One thing for us is to make those tough strategic choices, which I think we do quite well, and just be really good at something. So rather than spread yourself too thin, just be really good at one or two things, having made those strategic choices. And then I think longer term, I was talking to someone the other day, and they've the cooperators, and they've got work underway on 3 complex questions that they're trying to answer. And so I think for us, that would be a good exercise for us to go through, which probably link more to the 10 years than the 2 years, around things like moving from a personal ownership to utilisation, in terms of what that means for us. That's not something that's going to burn us up tomorrow, but unless we start thinking about that in the next year or two, it probably will. And sorry, the other thing we're going to keep doing is be proud of being mutual, what I'd say. Celebrate what we have, communicate it obviously to your point, Anne, but celebrate it internally and externally. I think that's a really important part of our model, because the alignment that we have with our customers and the owners are inextricably linked, unlike a stock company. So that's something we should be proud of, should celebrate those milestones that we achieve on the way to doing the things we want to do.
Well, I have to say I've been awake for 24 hours now, but I'm leaving on a high for 3 reasons. And reason number 1 is it is very palpable how special being a mutual is. And as we hear the dialogue, I think the runway for mutuality, it continues to be tremendously long, and the potentially very high. Number 2 I take away from this conversation is just the potential for cooperation and cross-learning, right? Just the common themes that you hear all 5 of you talk about in different flavors has struck me as being pretty special and something that is worth exploring. And the last one is just this notion of, how do you better communicate what you are to the communities you serve and to get talent? How do you make it human and, so you don't have to be an insurance geek like myself to like it? How do you make it for the common person something that resonates? And so thank you to our panelists for joining us, and thank you for the inspirational conversation.